Hello, everyone, and welcome back to What Changes. I am your host, May. If you have been watching the financial news lately, you know that the atmosphere has shifted. It is no longer just about inflation or interest rates. We are seeing cracks in the very foundation of the global monetary system. Today, we are going to do something different. We are going to conduct a deep dive analysis of a critical conversation between Daniela Cambone and Eric Griffin from ITM Trading. They uncovered some truly unprecedented signals in the gold and silver markets, signals that most mainstream analysts are completely ignoring. We are talking about dealers refusing to buy back inventory. We are talking about 6-week delays for wholesalers. And we are talking about a looming hyperinflationary reset that could change the value of the money in your pocket overnight. Before we dive into this critical data, I need to ask you a favor. Please, right now, check the link in the description and join our Telegram channel. That is where we can talk freely without censorship. Also, I have curated a list of essential book recommendations in the description to help you educate yourself on financial history. Knowledge is your only protection. Now let's get into the truth about what is happening to the economy. Let's start with the immediate chaos we are seeing in the markets. If you are watching the charts, you have seen the volatility. We are seeing gold and silver prices making unprecedented moves. We aren't talking about small fluctuations here. We are seeing $100 swings in the price of gold in a single day. According to Eric Griffin, the president of ITM Trading, this level of volatility is historic. He noted that the last time we saw a giant upswing comparable to what we are experiencing now was all the way back in April of 2012. Back then, we saw a $100 move in a single day, but today, these moves are becoming erratic. We see massive, unprecedented moves up, followed by massive, unprecedented moves down. For the average person, this is terrifying. You wake up and the price of gold has dropped significantly. You might panic. You might think the bull market is over. But Griffin warns us, do not get consumed by the temporary price action. This volatility is a trap. It is designed to shake you out of your position. The reality on the ground, the physical reality of supply and demand, tells a completely different story than the paper price on the screen. While the paper price whipsaws back and forth, the physical market is screaming that something is broken. Let's talk about inventory. This is one of the most shocking revelations from the source material. You might assume that because prices are high, everyone is selling, and dealers are swimming in cash. The truth is much more complicated and much more alarming. Griffin revealed that wholesalers are currently backed up for 4 to 6 weeks. Think about that. If you are a dealer trying to get product, you are waiting over a month in some cases because the volume of inventory coming in is so overwhelming. But here is the catch. It is not just about people buying, it is about the liquidity crisis facing the dealers themselves. We are seeing a situation where liquidity is drying up at the dealer level. There is only so much cash that dealers have access to. When a massive amount of inventory comes in from sellers trying to liquidate, dealers eventually hit a wall. They run out of liquid cash to buy back the metal. Griffin shared a specific example that should send chills down your spine. He mentioned that some dealers are now refusing to buy back 90% silver. They are literally telling customers, don't even send us your 90% silver. We don't want it. Why would a bullion dealer refuse silver? Because the spread is too big, and they simply do not have the cash flow to handle the volume. They are forcing a halt. They are saying, we have to stop. We have to hold. We can't buy any more back right now. This is a sign of a market that is seizing up. It shows us that the mechanisms of the physical market are under extreme stress. When you hear that dealers are refusing product, or that buyback premiums are widening so much that the trade becomes impossible, you are looking at the early stages of a liquidity crisis. This liquidity crunch is having a ripple effect that changes how business is done. The big online retailers, the companies that sell billions of dollars worth of metal a year, are having to change their rules just to survive the volume. According to the source, some major dealers are now imposing minimums. They are telling customers, we are not going to sell you product right now unless you spend $10,000 with us. Let that sink in, a $10,000 minimum. They are doing this because they have too much volume to handle. They cannot process the smaller transactions efficiently anymore. They are essentially telling the small buyer to go away so they can focus on the larger transactions and maintain some level of customer service. So, What happens if you are a small buyer? What happens if you just want to protect a few hundred or a few $1,000s of your savings? Griffin suggests that this pushes the market back to the local level. If the big online giants won't take your call for less than 10 grand, you have to walk down the street to your local coin shop. And what is happening there? In Phoenix, Arizona, Griffin observed lines out the door at local shops. People are desperate for cash. They see the rising prices and they want to sell. The local shops are likely welcoming these buyers because they need the inventory. But the disparity between the big retailers and the local shops highlights a fractured market. The system is struggling to process the sheer velocity of people trying to move in and out of these assets. But why is this happening? Why is there such a rush? And why is there such volatility? To understand that, we have to zoom out. We have to look at the macroeconomic picture that Eric Griffin and Daniela Cambone discussed. The phrase you need to learn today is hyperinflationary reset. For years, people who warned about the economy were called conspiracy theorists. Eric Griffin mentioned that his father started ITM trading in 1995. Back then, talking about the Federal Reserve as a private bank or discussing the end of the gold standard was considered fringe. People would say, "Be quiet, you're silly." But things changed in 2008. Griffin notes that the mortgage market in 2007 was telegraphing the crash of 2008. When that crash happened, the government's response was to print money. They printed and printed and printed. At the time, Griffin thought this injection of cash would cause massive inflation immediately. It did create inflation, but the system managed to kick the can down the road. However, since about 2018 or 2019, the conversation has shifted. It is no longer just about runaway inflation, like we have seen historically in places like Zimbabwe, Weimar Germany, or Argentina. Now the conversation is about a reset. Big players, billionaires like Ray Dalio, are now openly talking about this. It is no longer a fringe theory. It is a recognized economic trajectory. So, what does a hyperinflationary reset look like? According to the source, inflation will continue to ramp up. It will accelerate until we reach a hyperinflationary environment. At that point, the government and the central banks will have no choice. They will have to make drastic moves to save face. This usually involves lopping off zeros. Imagine a scenario where a loaf of bread costs $1 million. The government introduces a new currency where one new dollar equals 1 million old dollars. They wipe the slate clean, technically, but the purchasing power of your old savings is obliterated in the process. This is the reset. It is an overnight type of deal. It is not a slow decline. It is a sudden structural change to the money itself. And it is not just the United States involved in this dynamic. Griffin points out that the BRICS nations, Brazil, Russia, India, China, and South Africa, are trying to force this issue. They are challenging the United States' status as the world reserve currency. They want to operate outside the dollar system. This geopolitical pressure accelerates the timeline for the reset. We don't know exactly when it will happen, but as Griffin says, for sure it will happen. It is a mathematical certainty based on the amount of debt and money printing occurring. This brings us to the most common question I get, and the most common question Eric Griffin gets. Is it too late to buy gold and silver? People look at the price. They see gold hitting all-time highs. They see silver climbing, and they ask, is it too expensive? Griffin's answer is a resounding no. He argues that you should buy regardless of the price. Why? Because the current price is nowhere near the fundamental value of the metal. Based on the amount of money that has been printed and the debt in the system, Griffin estimates that the fundamental value of gold right now should be around $15,000 to $16,000 an ounce. Let me repeat that. $15,000 to $16,000 an ounce. For silver, he places the fundamental value between $300 and $350 an ounce. When you look at it through that lens, buying gold at $2,000 or even $3,000 isn't buying the top. It is buying an asset at a massive discount relative to its true purchasing power in a balanced system. Some analysts, like Jim Rickards, have even higher targets, $50,000, $60,000, even $100,000 for gold. Griffin explains that these numbers aren't fantasy. They are simply a reflection of future money printing. The more paper money they print, the higher the nominal price of gold must go to account for that dilution. So, if you are sitting on the sidelines waiting for a dip, you are missing the point. The goal isn't to trade the volatility. The goal is to secure ownership of the asset before the currency resets. Now we have to talk about the architects of this system, the Federal Reserve. There is a lot of speculation right now about who the next Federal Reserve chairman will be. There is talk about whether the Fed will be hawkish, keeping rates high, or dovish, lowering rates. There are rumors about candidates like Kevin Warsh potentially getting the nomination. But Eric Griffin cuts through this noise with a brutal truth. It doesn't matter. In his opinion, it does not matter who the president is. It does not matter who the Fed chairman is. These individuals are not independent. They are told what to do. Griffin states clearly that the Fed chairman reports to the people at the top, the central bankers who actually run the show. They will simply tell whoever is in charge, this is what is happening, this is what we are doing, get on board. The idea of the Federal Reserve being an independent government agency looking out for your best interests is a myth. As Griffin's father taught him decades ago, the Federal Reserve is a private bank. They print money out of thin air and charge interest on it. It is an unsustainable system designed to extract wealth, not preserve it. So when you see the news obsessing over the next Fed appointment, turn it off. It's theatre. The agenda is already set. However, there is one specific area of the economy that is forcing the Fed's hand right now, regardless of who is in charge. That area is commercial real estate. This is a ticking time bomb that we have discussed before on what changes, but the source material provides a very specific breakdown of why this sector is about to collapse and why it guarantees more inflation. We know that there is a looming problem with commercial real estate debt. Griffin points out that former President Trump, being a real estate guy, understands this acutely. There is a massive amount of debt tied to commercial properties, office buildings, multifamily units that was financed during the boom times. These properties are currently underwater. This means the debt owed on them is higher than what the property is actually worth today. Here is the mechanics of the trap. These properties were financed when interest rates were rock bottom, around 3% or 4%. They can only operate and pay their bills because their debt service payments are based on those low rates. But those loans are coming due. They need to be refinanced. If they have to refinance at today's rates, which are much higher, the payments will double or triple. The business model collapses. The owners will default. Furthermore, because interest rates are high, property valuations have gone down, so even if an investor put 20% or 30% down on a property a few years ago, that equity has been eaten up by the drop in value. They owe as much as the property is worth. To fix this, to prevent a total collapse of the commercial real estate market and the banks that hold those loans, interest rates have to come down. Griffin explains that we need that gap to close. We need lower rates so these massive debts can be refinanced. Otherwise, we are looking at a tidal wave of defaults. This creates a perverse incentive. The government and the central banks must lower rates and print money to save the real estate sector. But doing so will fuel the very inflation that is destroying the currency. They are trapped, and when they inevitably pivot to lower rates to save the buildings, the value of the dollar will take another massive hit. That is why you own gold. We have covered a lot of technical ground: the liquidity freeze, the dealer minimums, the real estate debt trap. But I want to take a moment to talk about the mindset you need to navigate this. In the interview, Daniela Cambone asked Eric Griffin about the atmosphere at recent investment conferences. She noted that the crowds are huge, reminiscent of the 2012 peak. People are excited by the parabolic moves in gold and silver. But this excitement is dangerous if it is misplaced. If you are treating gold like a stock that you are going to day trade for a quick profit, you are going to get hurt. You are going to get stressed out by the volatility we discussed at the start of this video. Griffin's advice is simple: buy it and forget about it. The purpose of gold and silver is not to make you rich in dollars. The purpose is to be there when you need it. It is insurance. You don't buy car insurance hoping to get into a wreck so you can get a payout. You buy it so that if the wreck happens, you aren't destroyed. He says, don't get sucked into the price action. If you are a consumer, your goal should be to buy it, set it aside, and don't worry about it. You are waiting for the reset. When you own physical metal, you are doing something revolutionary. You are becoming your own central bank. In a world where we have very little control, where the Fed prints our savings away, where geopolitics threatens our security, where algorithms control our news, owning gold gives you control back. It is the only asset that is truly outside the system, but still functions as money. So, what should you do right now? First, assess your exposure. If you are holding all your wealth in paper assets, stocks, bonds, cash in the bank, you are standing in the middle of the tracks while the train is coming. You are fully exposed to the reset. Second, understand the difficulty of acquiring metal right now. As we learned, wholesalers are backed up. If you wait until the panic truly sets in, you might face delays of months, or you might not be able to get product at all. The time to act is when the system is straining but still functioning. Third, verify your sources. Griffin made a great point about teaching his children to think critically. He tells them, don't get clouded by one side or the other. Verify your information before speaking so passionately on a subject. That is what we try to do here on What Changes. We don't want you to take our word for it. We want you to look at the data, look at the buyback premiums, look at the debt levels, look at the central bank buying sprees. Speaking of sources, I want to remind you again about the book recommendations in the description below. These books provide the historical context for what a currency reset looks like. It has happened before, and it will happen again. Reading these books will give you the roadmap to navigate the chaos. We are living through history. The signs are everywhere. When dealers tell you they can't buy back silver because they are out of cash, that is a sign. When major retailers set $10,000 minimums to curb volume, that is a sign. When the commercial real estate market is on the brink of requiring a massive bailout, that is a sign. The system is telegraphing its own demise. The hyperinflationary reset isn't a theory anymore. It is the logical conclusion of decades of bad monetary policy. Eric Griffin and the team at ITM Trading are seeing this on the front lines every single day. They are warning us that the window to position ourselves is narrowing, not because the price is going up, but because the liquidity and availability of the physical metal are tightening. Don't be the person waiting in line at the local coin shop when the panic hits, desperate for any cash you can get. Be the person who positioned themselves months or years in advance. Be the person who became their own central bank. We are going to keep monitoring this situation closely. As the commercial real estate crisis unfolds, and as the Fed makes its inevitable moves, we will bring you the updates you need. But remember, YouTube is not the only place we exist. To ensure you don't miss critical updates if this channel gets targeted, you must join the Telegram channel. The link is in the description. It is free, and it is our lifeboat for information. I'm May. This is What Changes. Thank you for watching, and stay prepared.